Hello everyone, welcome to EduTap. Am I audible to all of you? Can you please confirm? Can you give me a thumbs up in the chat box below if I'm audible and visible to all of you? Because then only we can start our session. Let's wait for just 5 minutes and then we will start with our session today. It will be a fruitful session for all of you because we are going to cover a variety of questions based on different concepts, and I request you all to please participate with your answers because phase 2 is just around the corner. And for all those who have cleared phase 1, very much congratulations to all of you. And those who have not cleared it, NABARD is around the corner, so don't give any hopes. Your time will also come. Okay, thank you. Thank you, Prakash. So in today's session, we are going to cover 40 most important MCQs related to different concepts of finance. And I will be asking variety of questions based on different concepts. So please be participative in this session. Before moving ahead, I would like you to please subscribe to our YouTube as well as to our Telegram channel. The link of the same is given in the description box below. And for all those candidates who are aspiring to become RBI Grade B officers, we are running a flat 40% discount, additional plus 10% extra. So you can avail that today by using this particular code as RBI, and all this discount will be running till midnight today. So let's begin with our session today. So first and the foremost question is from bonds. This is a very low, I would say, low hanging fruit for all of you. So identify the type of bond which are speculative in nature. They have a low credit rating. And they have high yields. Even they also have high coupon rates. So you have to identify the type of bonds. Who will be giving me the right answer for question number 1? This is the start of a lecture and we are going to cover 40 MCQs, and I will try to include as much different concepts related to bonds. So who will be giving me the right answer for question number 1? Let's see. The timer has started from here, so you have to take less than 1 minute to answer your question. So I can see Aditi is going with E, okay, and okay, so many of you are going with E. Okay, E junk. Yes, the correct answer will be junk bonds only, because in junk bonds you will see such types of bonds have a low credit rating but they give high returns. For example, if you see many of the bonds which are issued by low rating companies, they will give you high rates but they have low credit rating. Because they have low credit rating, they will be higher risk as well. Now my counter question to all of you is that what is in zero coupon bonds? Can someone let me know what is zero coupon bonds? It's a very important type and it can be there in your phase 2 as well. What is a zero coupon bond? You have to type your answers. Shivam is going with E. Vaibhav is also going with E. Yes, the correct answer is E. But can you let me know what is zero coupon bond? Come on, this is my counter question to all of you. And if you can answer it, then definitely your concepts are really very much clear. So what is the answer of zero coupon bonds? What is zero coupon bonds? What is the meaning of zero coupon bonds? Yes, issued at discount. Issued at discount, redeemed at face value. Yes. Under zero coupon bonds, you will see there is zero coupon, which means that there is only capital appreciation and nothing else. You purchase a bond at 100, it will be issuing at 80, but it will be getting redeemed at 120. So here your capital appreciation will be of 40. My next question to all of you is, what is callable bonds? What is callable bonds? So this is our first question. We have covered our second question as well. Now my question to you is, what is callable bonds? Come on everyone, you have to type with great speed in your phase 2 as well. Now if you are not able to type your answers, then your concepts are really weak. My counter question to you is, what is callable bonds? What is callable bonds? Can someone let me know? In phase, if you see the previous year questions, bonds chapter is really very important. No interested paid issued. That is Aditi is still answering for zero coupon bonds. Harship Mishra is saying issued by issuer. So callable bonds are a special class of bonds which an issuer or the company who is issuing the bonds have the power to call the bonds back to the company. In the same way, there is also puttable bonds. Puttable bonds are all an opposite of callable bonds. Under puttable bonds, the investor has the power to sell the bonds back to the company. So please notice all these different types of bond. Now moving ahead, there is also a very important class of bond which is known as subordinate bonds. And we also have superior bonds. So not wasting much of your time, because these are really very important. Superior bonds are those particular bonds which are paid in they are paid in priority, and subordinate bonds are those types of bonds which are paid after superior bonds are paid. If you want to understand more on bonds, then there is also a type of bond which is known as serial bond, and there is a opposite of serial bond is term bonds. Under serial bonds, you have to make payment in different installments, but under term bond you have to make one time payment. So these are really very important classification of bonds. So I repeat again, serial bonds are different types of bond under which the payment is made under installments, but under term bond it's like a one shot payment, as simple as that. So these are some various types of bonds as well. Now if you see, if you go deep into this particular, there are also fixed rate bonds which pays you a certain interest over a period of time. There are inverse floaters. These are certain kind of interest. They will pay certain type of interest minus something. Floating rate instruments, they will pay something regarding your LIBOR or something. So the rate of interest on these types of instruments gets fluctuating. So these are some really very important types of bond. Now please note this particular point as well, that bond is a type of a debt. Bond is not an equity. Bond is a type of a debt. So all these are different concepts related to bond, and you have to write a descriptive answer if possible, that you can have a descriptive answer of what are different types of bond. So if you include all these bonds or different types of bond, then it's definitely good for you. So I'm not reading all this explanation because this is for your homework, and I have covered all these different types of bonds in the previous slide. Now let's move to question number 2. Now we are coming to annuities. Annuities. Anji, so Weber is saying callable bonds are the bonds have right. Yes, that's definitely true. Weber has a good conceptual clarity. And please note that the opposite of callable bond is puttable bonds, in which the investor has the right to sell the bonds back to the particular company. Anji, so who will be giving me the right answer for question number 2? Who will be giving me the right answer for question number 2? I am waiting for 1 minute. If you are taking more than 1 minute, then it's a cause of worry for all of you. So Nindan is saying it's D. Okay, only one is correct. Weber is saying it's D. So if you be there for next 2 hours, then we are going to cover more than 200 questions via an informal way. Although in PPT there are only 40 questions, but I will be asking many questions if you allow me. So which of the following statement is correct? So maximum of you are going with D. Okay, we will see. Any other answer in the comment box? State. Okay. So someone is also saying it's C. See, the correct answer here will be E only, that all of the above statements are correct. Why? because if you see annuities are a certain type of a class wherein different series of payment can be made. You can break annuities into insurance products as well. You can break annuities into retirement products as well. So please be informed that annuities can be structured into different financial instruments. This statement is true. Now for your all knowledge, there are two types of annuity. First is ordinary and the second is due annuity. Under ordinary annuity, you have to understand that the investment or the payment is done at the end of the year, and under annuity due, the payment is done at the start of the year. That's why all of the above was the correct answer. Although this was a very easy question, but I'm really surprised to see that how many of no one of you get the right answer. So time is now to buck up. Now we are coming to question number 3. This is again from bonds. A very basic question on relationship between different components. So who will be giving me the right answer for question number 3? I can see very less participation is going in the chat box below, so I think I should wait for, let's see if someone can give me the right answer for question number 3. Who will be giving me the right answer for question number 3? Who will be giving me the right answer for question number 3? So Nix is going with D. Yes, Nix, superb. Your knowledge is really good. Nix is going with third D. Yes, the correct answer will be D. Please understand that if you are studying bonds, then these three relationships which I am going to just write in the board are really very, very important. So first you have to understand that bonds are negatively correlated to yield rate. Again, second relation is that bond is negatively correlated to interest rate as well. Now if you want to understand the relationship, then we will discuss it in the end of the lecture, but right now just understand the summary part. And the third relation is that interest rate is positively related to the yield rates. So all this knowledge is really very important, and that's why statement C was incorrect. Okay, A and B were correct, so only statement A and B are correct. So if you are having time, go through all these images. We will be sharing the PDF in our Telegram channel, so you can revise it via this particular slide. Now we come to question number 4. Again, this is a very, I would say, a low-hanging fruit for all of you. If such questions comes in exams, then you have to target like this particular question under 5 seconds. So let's see who gives the right answer for question number 4. So who will be giving me the right answer for question number 4? I again repeat, today we are going to cover 40 questions, and out of this 40 questions, if you show your active participation, I can make this 40 to 200 questions. But I need active participations only of, let's say, 10 members as well. I can ask you variety of questions based on current affairs, based on budget, economic survey, and so on and so forth. But right now, I can see the participation is really very low. So who will be giving me the right answer for question number 4? Okay, Dhaval, Manas and Nix again are going with different combination. Okay, BD, convertible bonds. On UPSC, if you see this year CSC, there was a question on convertible bonds. So this is also very much in news. Yes, the correct answer will be D. Can someone tell me why D is incorrect? If you are copying answers just from the chat box, then it will be really difficult. Why D is incorrect? Sonia is also going with D. Okay. See, D is incorrect because this is the later part of the statement is incorrect. Why? These are not paid at the end of maturity. These are paid between the maturities. Or you can also say they are paid regularly. So that's why that statement D was correct. If you are having a good understanding of this particular chapter of bonds, that there are only term bonds. Under term bonds only, payment is made at the end of this particular year, particular maturity of year. So you have to understand under term bonds only the there is one time payment which is made. Okay, so I have discussed about different types of bonds. This will be puttable bonds. Now we are coming to question 5. A very easy question. We have just discussed it right now only. Can someone answer this in this particular question in less than 10 seconds? This is a challenge right now. Who will be giving me the right answer for question number 5? Who will be giving me the right answer for question number 5? Yes, term bonds. Manas is going with the right answer, that is term bonds. Yes. Now my dear friends, there was a news regarding Formosa bonds, if you are able to recall it. Formosa bonds is also a bond which is issued by in the currency of Taiwan. I hope you all know this. So can you let me know the name of the bank which issued Formosa bonds recently? Because this is a potential phase 2 current affairs question. Formosa bonds. I can see Nilesh is back in the chat. Good to see Nilesh. Formosa bonds was recently issued by which particular bank? Yes, it's what Taiwan. Yes. So Veena is going with SBI. Yes. SBI recently raised Formosa bonds worth of $300 million. So all this is, you have to relate this particular knowledge with your current affairs as well. Now my next counter question to you is, have you heard about Panda bonds? These are also a very special class of bonds which are issued off late, not recently, off late, but these were also in very big in news. Can someone let me know what is Panda bonds, or can you let me know the country which is associated to Panda bonds? A very easy question. Can someone let me? Can someone let me know what is Panda bonds? Panda bonds are issued in China. In the same manner, we have Masala bonds for India. Masala bonds are issued in India, which was firstly issued by International Finance Corporation. So superb. I think a maximum of you are giving the right answers. In the same manner, let's move ahead, and we have a lot to discuss today, so I want you to be participative. If you are not participative, then I can finish this particular PPT in just in half an hour. So now we have a question on TVM, that is your time value of money. Can someone let me what is the right answer for question number 6? In the same manner, if you are going into that much deep, there also are samurai bonds. Can someone also lend me samurai bonds are issued in which countries? Kerala. Kerala is not a country. Veena is saying it's Kerala. How can Kerala be a country? I request everyone to please focus on the lecture only. This is a really very important class, because if you are not able to score more than 30 here in out of 40 questions, sorry to say, then your revision is really very in doldrums. Yes, the correct answer will be continuously. Why? Because if you see the formula, future value is equals to present value into, not plus, sorry, into 1 plus R plus T. So this T is positively correlated to future value. The number of times you increase T, you will have a larger future values. Although this particular situation is hypothetical in nature, but continuously compounding gives the best results. See, the answer to this samurai question will be Japan. Yes, superb. So don't get confused when different components are there. Now question number 7. Let's see who gives me the right answer for question number 7. Okay, Masala was first issued by Kerala. Okay, no issues. So who will be giving me the right answer for question number 7? Face value is also known as a par value or principal. Zero coupon bond is a type of a bond that pays no coupon. Okay. Coupon rate of a bond is also known as a nominal or a quoted rate. Also in bonds, if you are covering it, there is a concept of YTM. Also type the full form of YTM if possible. So Nilesh is going with A and Shivam is going with E. Veena is only going with 2, that is D. Sonia is also going with D. I can see some members who are here from our LPS only. Yes, the correct answer will be E because all these particular statements are correct. Face value is also known as the par value. Yes, this is particularly true. Zero coupon, we have just discussed it. Zero coupon bonds only provide capital appreciation. This is also correct. Coupon rate of the bond is known as nominal rate or quoted rate. This is also correct because coupon rate is the interest which you will be getting right now. Yes, yield to maturity is the right answer if you are covering this particular, and if you want to study more, then yield to maturity is equals to coupon rate plus face value minus the market price divided by 2 upon face value plus market price divided by n. Okay, so this is really very important. If you have a certain if you are not able to memorize, then you can skip, but if you know it, then it's really good. Hanji, so question number 8. Which of the following is not a feature of derivative? We have covered bonds and we have also covered TVM. Can someone let me know the correct answer for question number 8? Who will be giving me the right answer for question number 8? Question number 8. So Nilesh is going all derivatives are mostly traded on stock exchanges incorrect. Okay, Dhaval is also going with the same question. Shivam is also going with this. Okay, yes, the correct answer here will be you have to identify which of the following is not a feature. So yes, derivative, all derivatives are mostly traded on stock exchange. This is a blunder according to me. So if you see in your course, we have different, majorly 4 class of derivative. The first is forward. The second is futures. Then we have swaps. Then we have options. If you ask me how to remember all of this, then you have to club it like this: forward, and we have this particular swaps, and then you have futures plus your options. If you combine this, then your memory trick will be too much good. Now please understand this particular thing, that all the forwards and swaps are traded off the exchange. This is really very important. All the forwards and swaps are having customized contract. And you also have to remember, if they are having customized contract and if they are traded off the exchange, then they are having high credit risk. This is really very important. And you have to understand that opposite of all this different characteristics will apply to futures and option. Futures and option are traded on the exchange. A very basic concept. They are standardized in nature and they are having low credit risk. This is really very important question. And if you see the PYQs of previous year of RBI Grade B, then all these questions are asked in like 2 marker question. You have to just remember all this relationship which I have just texted on this particular slide. Now let's move ahead. Question number 9. Which of the following is correct regarding futures? A very easy question. Hardly less than 5 seconds, I would say. Please ignore this particular unemployed guy. These are just... who will be giving me the right answer for question number 9? Which of the following is correct regarding futures? Now the statement is asking regarding correct statement of futures. So Nilesh is going with D. I have seen Nilesh in my LPS session as well. Are you the same, Nilesh? Shivam is also going with B. Nix is going with C. Harsh is saying it's all of the statements are correct. Right now only we have covered different concepts. The answer will be B. So those who have given the answer as B, we have already covered different concepts of futures. Please understand futures and your options. If you see, the maximum of the characteristics are the same. Please understand this particular thing. It is regulated by Forward Market Commission. This is wrong. They are regulated by SEBI. Only before certain period of time they were regulated by forward commissions, but now they are regulated by SEBI. So please, this is a very important statement. It is a standardized contract. Yes, it is a standardized contract along with options as well. Why it is standardized? Why it is standardized? Because you cannot make changes according to your own. Futures can be traded over the counter. This is incorrect. Now my counter question to you is, you have to tell me two very important names of derivatives which are traded on the exchange, or I would say which are traded off the exchange and they are traded on the over the counter. Tell me the name of those two particular contracts which are traded on OTC market. OTC market is also known as over the counter market. Can you name that particular two contracts or two contracts of derivative which are traded on OTC? Can someone please let me know the answers of this? Yes, forwards and swaps. Yes, superb. Forwards and swaps. This is a very important understanding. This basic knowledge will be tested in your RBI as well, because they will asking your question on journal finance. So this is really very important. And the statement D is like just a no-brainer for all of you. There is no obligation if this is incorrect. Why? Because there is an obligation to buy and sell. So nothing much to discuss here as well. Now question 9 is also covered. So please note that all the different instruments are now regulated by SEBI. Now we are coming to question number 10. Equity and Forex. Who will be giving me the right answer for question number 10? A. FIMDA. FIMDA is a very important institution. Like for mutual fund, we have AMFI. For money market development as well as for derivative, we have this. Okay, maximum of you are going with D. Yes. The correct answer will be C. Why? Because FIMDA stands for Fixed Income Money Market and Derivative Association of India. So fixed income, this is a really very important association. For mutual funds, we have AMFI, which is All India Mutual Fund Association of Mutual Funds in India. This is also very important association which looks after different schemes of mutual funds. So you have to understand this. Now my counter question to you is that in stock market you will find three different parties: hedgers, speculators, and you have to name the third one. Can someone let me know the three parties of stock exchange? There are three parties in stock exchanges. The first is hedger, speculator, and the third one is known as? Can someone let me know? Come on, this is my counter question to you. Right now we have discussed 50 questions based on different concepts. First party is hedgers, second party is speculators. We will understand what is hedgers, speculators, and the third party is known as? Can someone let me know what is the name of the third party? I request everyone to please type as much fast as they can, because in exam as well, traders, not traders. We will understand the difference between traders and investors. The third party is known as arbitrators. I can see you are disappointing me right now. Hedgers are the one who plays safe. Please note this particular point. Speculators are the one who wants to take risk, price risk. They will manipulate all the stock exchanges. And what is arbitrators? Arbitrators are the person who buy at one market and they sell at other market. For example, if you see, They will buy NSC, they will buy at BSC and they will sell at NSC or vice versa. So all this is really very important knowledge of your stock markets. Arbitrators, yes, Shivam and Veena got it correct. Now question number 11, my friends. Which of the following statement is incorrect regarding margin money? In 2017, there was a direct question based on numerical, although on this particular concept, margin money. So which of the following statement is incorrect regarding margin money? And if you are able to recall that particular question, I am giving you the answers. What you can do is you just have to answer this particular question and then you have to answer this particular PYQ of 2017 phase 2 question. Now listen to this question carefully. A trader buy the stock at 400, he sells at 440. Okay, so you have to tell me the profit percentage over here. And in the second case, trader buy at 400, he sells at 440. But here the margin amount is 10% only. And you now have to tell me the profit percentage. So according to Nilesh, the answer for question number 11 is C. Okay, margin money is charged from both. Why it is incorrect? Margin money is charged. So this is correct, right? So statement C is not correct. Statement C is correct, I would say. See, the correct answer will be A. So post your answers of this particular question in the comment box below. Right now I'm discussing question 11, but I have given you an additional question. I need answer from both of these two questions in the comment box below. Now question number 11 says that which of the following is incorrect. See, the first statement itself is incorrect. It is not predefined. For example, if let's say I am doing a trade of rupees 10,000 and Mukesh Ambani is doing a trade of 1 crore or 10 crore or let's say 100 crore, the margin requirement for me as well as for Mukesh Ambani will be different. For me it will be less, or for Mukesh Ambani it will be more, because the amount involved is more. So that's why statement A was incorrect. And please post all your answers. If you are not able to, you are just skipping numericals, then sorry to say RBI is notorious for doing different kinds of stuff. So you have to post the answers of these two questions in the comment box below. Hanji, so now let's move to question number 12. Which of the following is not associated regarding the options contract? Firstly, answer this question and then I have 3 different questions to ask from this particular question. Question number 12. Which of the following terms is not associated with the options contract? Not associated. Let's see who gives me the right answer for question number 12. The answer here will be E. All of the above are associated to options contract. Lot size is the total number of shares into a particular lot which you purchase. Strike price is the contract price in which you enters into a contract. Premium is paid by buyer to the seller for the rights which he is purchasing. And expiration date is also known as maturity. Now my dear friends, you have to tell me whether options contract are customized or whether they are standardized. Options contract are standardized or are they customized? Let's see who gives me the right answer for question number 12. Are the option contract customized or standardized? Standardized, yes. Standardized because it is issued by stock exchange. Now tell me 2 types of option contracts which are issued by the stock exchanges generally. Which 2 types of options contract can be seen in the Nilesh is saying customized. How can option contract be customized? I'm really shocked to see the answer of Nilesh now. Options contract will be standardized because these are traded on stock exchanges, and on stock exchanges you cannot make the changes. That's why it is not customized, it is standardized indeed. Customized, please note this particular point, these are forwards plus your swaps. Right now only we have discussed this. Answer to this will be call and put. Call option and put option. These are some very basic question. Hanji, so option E, we have discussed this right now. Now we are coming to question number 13. Question number 13, which of the following statement is incorrect? I request you please ignore the irrelevant stuff in the chat box. The answer here will be D. Holder of the put option would not buy, instead he will sell. Please note this particular point. Under put option or under in call option, firstly, you buy. The holder of the option buy, and the holder of the option under put will sell. This is really very important, and I hope you know all of this stuff. This is also done. Now we are coming to question number 14. When the call option buyer doesn't exercise the contract on maturity, the seller may ask the buyer for compensation. The contract is renewed, the contract lapses, or the seller will sell the same contract to other potential buyer. Yes, this is the answer of this particular contract or this particular question will be C. Why? Because the contract lapses and no further action is required, because this particular contract will have a zero premium value or time value. So you have to understand, when the contract expires, then no action is required and the contract will lapse. So that's why the answer will be C. For example, if buyer and seller, if buyer is not executing his right, then seller will just let the contract pass away. This is really very important, and I'm really surprised to see the answers of many people. Question number 15, American options or European options. I hope you know about these two concepts. These are also very much in news regarding if you are reading any business financial newspaper. Question number 15, American options have no premium attached to the contracts. American options have more volatility. American options can be exercised anytime. Yes, this is correct. Statement C is correct, because C, under American options and European options, the major difference is that American options can be exercised before the maturity. Okay. And under European option, they will be only exercising at the end of maturity. This is really very important option which you have to understand. Question number 16. Now we have covered different derivatives. Now we are coming to different equities market. Question number 16. Please focus on the question. Let me make some flow diagram for you so that this particular question will be cakewalk for you, all of you. Let's see who gives me the right answer for question number 16. I need answers from question number 16 now. 16, Sudhanshu is saying it's B. Only statement B is correct. Stocks and equity represents a claim. Okay. Yes, the correct answer will be B. Now first, before understanding this particular question, let's understand this particular graph which I have just written for you. Markets are recently divided, or not recently, according to many books, they have divided into two parts: the capital market and the money market. Capital market is for long-term securities. Okay, and money market is for short-term securities. This is really very important. Okay, and under capital market, you can again go deep. You will find primary market and secondary market. And we will discuss about primary and secondary in the some questions which are coming next night in the next slide. Under money market, you have to understand these are short-term markets, and money markets have been divided under three different types, that is call, notice and money. Under call money, you will be borrowing funds for just 1 day. Under notice, you will buying funds for 1 to 14 days, or let's say 2 to 14 days, sorry. And under term money, it will be more than 40 days, up to 1 year only. So maximum 1 year, 14 days to 1 year. So this is really very important for all of you to understand this particular I would say, flow chart. Now coming back to the question, capital markets are used for long-term assets which are asset maturing less than 1 year. This is incorrect. We have just discussed it right now only. Stock and equity represents a claim. Yes, they represent a claim. If I own 1% of the stock of the company, then certain part of the company will be me. With me. Statement C, even buying one stock will enable you a dominant. No, it's like you will be a passive shareholder. So therefore, statement B is only correct. So we have discussed about money market and capital market in the previous slide. So now let's go to question number 17. Which of the following statement? Read the following statement and then you have to identify the incorrect statement. Okay. So here we will be discussing about primary and secondary. So let me make a flow chart again. This is our capital market. We have understood why capital market is known as long term in the previous question. Anji, so let's see who gives me the right answer for question number 17. All of the above statements are incorrect. Okay, I can see maximum of you are going with E. So when a company issues share to the people, or before moving to question, let's understand the concept first. So capital markets basically are the markets for long term. We have understood this particular concept in the previous slide. Now capital markets can be divided into two parts, the primary market and the secondary market. Primary market is also known as new issue market. This is a very important note. Please note that new issue market. Under primary market, you can find different instruments like your initial public offering or initial public offer, all your FPOs, follow on public offer, and then you also have rights issue. Then you also have your preferential issue. All this is discussed in your concept notes. So if you see, the primary market can be further divided into such parts. Now capital market is also as having secondary market. Now under secondary market, company doesn't play an important role. Company plays an important role in the primary market, but under secondary market, company plays a very passive role. Why? Because here, let's say if I have issued shares, or let's say if LIC shares were issued in IPO, then they will be traded here. So here only possession of shares takes place, or possession sharing of processing takes place. So for that particular reason, answer for this particular question will be statement E. When a company issues share to the people or certain individual, it is called as secondary. No, it is known as primary. When one person buy and sells from other person, it is known as primary. This is also wrong because it is known as secondary. A company has a major role in secondary. This is also wrong. Statement C and D are just interchanged. So I hope that much is very much clear to you. This is primary market and this is secondary market. Question number 18, my friends. Dash is the value of the company as listed on books and share certificates. So what is the value which is listed on the, let's say, certificate which is issued initially? A very easy question rather. We will take an example of LIC, let's say. LIC IPO. I hope many of you invested over here and are now bearing a good fruits. So question number 18. Let's see who gives me the right answer for question number 18. Hanji, it's face value. Now, please listen to this particular explanation. If you see the LIC IPO, which was very much in the news of late, the face value of per share was rupees 10 only. So if you understand the certificate thing, the face value of per share was 10. Although the market price after the issue was reduced, and that's what issue price is all about. Issue price says that after the IPO opens up, then what will be the market price. Now the market price according to that particular IPO was 900, if I'm not wrong, in the 900 levels. What was the face value? 10. What was the issue price? 900. What is the current price? Current price is regarding 750. So this will fluctuate daily. And what is this discounted price? Discounted price means, for example, in LIC there was some discount of 60 rupees for policy holders, and there was 45 rupees discount for retail investors, plus the employees of LIC. So this is discounted price which has been issued. So these are some important concepts which you should do, and you should have to relate this particular concepts with your current affairs as well. So this is the I would say stock certificate in which face value is written. Now let's move to question number 19. Now we are coming to IPO and FPO. Focus on the question. Question number 19. These are some phase 2 level questions only. So if you are not able to answer them well, then it's a time for wake up for all of you. Read the following statement and then select the right code from below. When an unlisted company wants to go public for the first time, it can be done via an IPO. Unlisted company, okay. Under follow-on public offer, already listed company generates funds from the public, okay. Disinvestments are an example. This statement becomes wrong. All the disinvestment are an example of offer for sale. Please note this particular point. That's why only statement C was incorrect. So let me see who have given the right answer. To the banker, Nilesh, all have given the right answer. Newly, Nix and Veena, all have given the right answer. Now, my dear friends, if you are understanding the IPO term, then in IPO there are three types of investors. Please note this, three types of investors. The first is retail. Retail investors are those investors which are general public and they invest less than 2 lakhs. This is really very important. NIIs, which is also known as non-institutional hold investors, which are also known as high net worth individuals. These are the people who invest more than 2 lakhs. And what are QIBs? QIBs refers to big financial institutions which invest the money into the stock market. For example, let's say there can be a pension fund from Dubai. These are some big financial institutions who invest into the money into the stock market. Now, my dear friends, if you are also having knowledge regarding IPO, let me allow to tell you that under IPO, 50% of the fund, 50% of the issue size is reserved for QIB. 35% is reserved for your retail investors, and rest 15% is reserved for your high net worth individuals, which are also known as NII. So these are some important facts and you should do them thoroughly. Question number 20, financial inclusion. Okay, financial inclusion. Let me write some initiatives by the time you answer this particular question. Anji, so who will be giving me the right answer? So earlier I have given 2 questions for you to comment in the chat box after this particular session, because if you are not able to answer that question, then you are in a big trouble. Now my next question to all of you, that you have to tell me the year in which Nfse has been made operational. You have to tell me that particular year. In the same period, you have to tell me about NFSI. This is National Strategy for Financial Education, and this is National Strategy for Financial Inclusion. Then this is your Digital Payment Index. Tell me the base year of Digital Payment Index. And under e-rupee, you have to tell me the voucher limit. All this different question, you have to comment in the chat box, or either if you can have this particular time, or if you have some extra time, then answer this in the comment box. These are some really very important initiatives of financial inclusion. Yes, Nilesh is saying NFSE 2000, yes. NFSI, yes. So Nilesh has given the right answer. Kudos to you. But all those who are seeing this session lately, you have to answer all this question in the comment box. Yes, the answer of this particular question will be subsidies. Subsidies are not included under the net of financial inclusion. Why? Because subsidies are not given just to for promoting different literacy concepts. It is given for production purpose. That's why subsidies are not a part of financial inclusion. Yes, Manas is saying National Strategy for Financial Inclusion. Yes. Question number 21. Which of the following is a depository house? So there are again different institutions into the stock market. Which of the following is a depository house? A depository house is an institution which maintains all the different securities in the electronic form. So now let's see who's give me the right answer. It's B. NSDL CDSL. Yes, the answer will be B only. National Securities Depository Limited and Central Depository Services Limited. So that's why the answer will be B. These are the two subsidiaries. CCIL, that is Clearing Corporation of India Limited, is a central counterparty. This is a very important concept. These are the central counterparties. They give you a platform on which different trades can take place. BSE and NSE are world famous stock exchanges. Can you let me know what we all know that BSE has a very important index, that is Sensex. In the chat box as well as in the comment box, let me know the total number of shares which are there in Sensex. And you also have to tell me the full form. I will be checking all your answers. And under NSE, we have this particular National 50 or Nifty 50. Tell me the number of stocks which are there under NSE, and also tell me the full form in the comment box. If you are not able to answer such basics question, then sorry to say your preparation is on very low level. This is question number 7 and 8 if you are seeing all the hierarchy of questions. Let's move ahead to question number 22. Now we are coming to debt market. What is the minimum maturity of debt market, or not debt market? I am asking about the minimum denominations of T-bills. 5,000 shares. Okay. Or I would rather ask how many industries are included under the BSE or NSE. Okay, I can see maximum of you are going with the right options. That's really good to see now. I need answers from everyone. What is the answer will be for question number 22, T-bills? Anji, so who will be giving me the right answer? Veena is going with 25,000. She is not updated with the knowledge or the current happenings. Veena, you have to just note this particular point, that the minimum amount for T-bills have been reduced to 10,000. This is really very important. Please update your knowledge, and this is the most important question of today's slide as well, because this is directly related to the RBI. Now, my dear friends, T-bills are a government security. That's why they have zero credit risk, because in sovereign guarantees, there is zero risk. T-bills are across three different maturities. The first is 91 days. The second is 182 days. And the third one is 364 days. And you also have to remember that on every Friday, RBI has an auction of 91 days T-bill. Now, let's move ahead to different other components of debt market. You can read this particular statement that 10,000 is the minimum amount which is required for treasury bills. Question number 23, my friends. A very easy question, generally based on definitions. You will find such low hanging fruits in your exam as well. So take less than 5 seconds to answer this question. Let's see who gives me the right answer for question number 23. And if you want to get your answers cross-check, I will be seeing all your answers in the comment box, and I will be personally replying all the answers. So don't worry. Just answer all the questions which I am asking. 23B, yes, prospectus. If you see recent happenings only, the first, if a company is going for an IPO, they have to file a prospectus with the market regulator, which is SEBI. And this particular prospectus is then released to journal investors. And what are the key details which are there in the prospectus? They will be giving you the IPO price band, They will be telling you about how the company is operating, what are the future prospects, so on and so forth. So this was really very easy question. Now we are coming to question number 24. This is regarding depository receipts. So mainly there are two, but in Indian context there are three as well: American depository receipts and global depository leaves. So you have to tell me the holder of ADR, which is this is also ADR and GDR, does not have the right to. Let's see who gives me the right answer for question 24. Question 24, everyone. Let's see who gives me the right answer. In Indian context, there is also IDR, which is also known as Indian Depository Receipts. 34. Oh, I would say 24A. Yes, ADR and GDR. For example, if you want to raise some funds into the American economy through American Stock Exchange, then you will have to take an example of help of ADR. But if you are issuing ADR, then you will not get any voting rights. In the same case, outside America, that is in Europe, even in Australia or some other countries, then you will have to use the same document. And in Indian, that is Indian Depository Receipt. For example, those company who wants to raise funds in India, they can issue IDR to their investors, but these investors will not have any voting rights. They are entitled to receive dividends. This is really very good. Hanji, so we have covered about this particular concept. Now let's move to question number 25. Money market instruments have maturity period up to. A very easy question. A low hanging fruit again. Question number 25. Money market instruments have a maturity period of. Yes, up to 1 year. And recently only we have discussed that there are three different components of money market. So do revise them. If you see, there are some examples. The treasury bill is the finest example. Then we have COD, then we have commercial paper, and then we also have cash management bills. Then we also have CBLO. All these are examples of money market. So this is really very important to you to understand. I can see very less participation in the chat box, so please improve your participation unless it's your loss only. Which of the following is not a debt market instrument? Can someone let me know what is a debt market instrument? Which of the following is not a debt market instrument? So Manas is going with B, treasury bills. That's a blunder, I would say. Treasury bills is an example of debt market because it is issued by RBI on the behalf of government, and it's a type of a debt only. Which of the following is not? Preference shares are not an example of debt market. Instead, they are an example of equity market. Or you can also say shareholders market. Now my dear friends, if there is a baat hui hai preference shares ki, to we have to understand the difference between preference shares and equity shares. So just remember these 2 points, A and B, that preference shares will get preference over the dividend, which means that when the dividend distribution is going on, preference shares will get their right first. The second is during the winding up. If the company is winding up, they are closing their business and they are saying Tata bye bye to their investors, then preference share capital will be paid first. So these are the two big preferences which preference shareholder get before equity shareholder. So this is really very important. But with these preferences, there are some side effects as well. They do not get any voting rights. They do not take part into the extra profits. They are just foreign namesake holders. They are like passive holders. Only equity shareholders are active holders. Very important. So you have to remember that passive shareholder is also known as preference shareholders. Now let's move ahead to question number 27. Which of the following statement is correct regarding government security? This is an exact level of your phase 2. Question number 27, guys. Let's see who gives me the right answer for question number 27. So Manas is going with C, that GSEC has practically no risk of default. Okay. Nilesh is also going with B. You have to identify the correct statement, my friend. The correct answer will be option C. Why? Because GSECs carry no risk of default. This is correct. Why such securities will be short term? If you are buying a long term bond of, let's say, 10 years of government of India, then how can it be a short term security? I don't know how people are saying all of the above and all. State development loans are not a part of GSEC. This is also wrong. All the state development loans are the part of GSEC only. Please focus on the lecture. I'm really disappointed by the answers which I'm getting in the comment box, because these are some very important questions. Now for COD, my friend, that is certificate of deposits. Certificate of deposits. Now you have to tell me the correct, you have to identify the correct statements regarding the certificates of deposits. So who will be giving me the right answer for question number 28? And I request you all to please comment. If you are being a couchy potato here in the session, then the same will happen in the real examination hall as well. Because if you are not able to answer questions here, then how can you imagine yourself answering those questions in that particular situation where the pressure will be too much? 28C, only statement C is correct. Maturity of COD should be less than 7 years and not more than 2 years. Okay. Anyone else with the different answer of question number 28? Manas has gone with A. Yes, my dear friends, the answer will be A. Now, please understand this particular statement is incorrect because the minimum COD limit is 5 lakh. And if you see, this particular statement is correct because in India, regional rural banks, small finance banks can issue certificate of deposits. Maturity of COD should be less than 7 and not more than 2 years. This is also incorrect because 7 days to 1 year hota hai. Please remember this. This is really very important. That's why it is a classification of money market. COD is a part of money market because of this particular reason. I don't know why I am getting different answers. All are incorrect. Nilesh is going with C. Only statement C is correct. So this is really very disheartening to see. Now question number 29. Which of the following organization act as a depository house for trade of government securities? Question number 29. Which of the following organization act as a depository house? So the answer will be Public Debt Office. This is an office which is attached to the Reserve Bank of India. It is a depository house for government securities. Please note this point. And if the securities are traded by me or by you or any other person who is not a journal, who is not a government, or I would say who is not trading into the government securities, then all this particular securities which we generally trade in a daily day-to-day life is holded by NSDL or by CDSL. Please remember this. These are the two important depository houses in India. Now let's come to question number 30. Question number 30. Which of the following is most incorrect one? You have to identify the incorrect statement here. Read the question carefully now. Also let me know the denominations for commercial paper, and you also have to tell me the maturity period. Maturity period of commercial paper, minimum to maximum. Question number 30. Commercial paper is a secured and a short-term loan taken by corporation. This is incorrect. Even in the first read only you can find commercial paper are unsecured. These are issued by the private corporations, and such private corporations generally do not have any good credit rating. The answer for these two particular points will be 5 lakh. Denomination of a commercial paper starts with 5 lakh and a multiple years of, and a minimum maturity period is of 7 day to 1 year. This is really very important. Please note all such points. For COD, if you see the minimum denomination is 5 lakh, please note this particular point. It can be from issued from 7 days to 1 year. But for financial institutions, this is generally for banks and payment banks and all. But for financial institutions like IFSCL, they can issue COD for 1 to 3 years. Also note this particular point that for COD, we do not have any, banks cannot lend loan. Banks cannot lend loans for COD. So this is also very important concept. For treasury bill, please note that the minimum amount is 10,000 and the maturities are 91, 182 and 364. Please note this particular point. There is also a component which is known as cash management bills. Although there is no denomination for it, but these are generally issued for less than 91 days. So if a government is needing fund, a government needs fund rather, they can issue cash management bills. Then they can offer T-bills. Please note all these points. This is really very important for your phase 2. Question number 31. With respect to strips. Strips is a very important component of your equity market. Strips, government securities associated. What is the correct term of T? T क्या stands करता है when it comes to strips? Yes, STRIPS stands for trading. Superb. STRIPS are generally separate trading for registered principal. If you are having, let's say, a 30-year government bond, then you can break this particular security into different documents, or I would say different parts. You can make it a zero coupon bond which will expire in 1 year, so you will get a part of this under 1 year only. So these can be divided into certain numbers of year. Question number 32, my friend. This is from your commercial bills. There are certain commercial bills. Now you have to identify that particular commercial bill. If the seller wishes to give some time of repayment and the bill will expire at a future date, the bill will be payable at future date. You have to identify which type of bill is there which will be payable only at a future date. ट्रेड बिल, ट्रेड बिल्स को हम लोग कमर्शियल बिल्स ही बोलते हैं अगर आपको पता हो तो. सो ट्रेड बिल इज नॉट एन आंसर. दिस वाज जस्ट टू कंफ्यूज यू. See, commercial bills can be divided more largely into two parts. The first is apna demand bill and the second is usance bill. Under demand bill, I will have to make the repayment of that particular bill as and soon when the someone presents me that bill. For example, if let's say Ram goes to Sham for asking some funds and he has issued a demand bill, then Sham will have to issue that particular fund as soon as possible to Ram. Under usance bill, there is a maturity period, as simple as that, plus a grace period which is generally of 3 days. So please remember, usance bill expire after a certain period of time. Question number 33. SEBI has introduced the concept of anchor investors. Okay, here also note that anchor investor is issued up to 60% of the quota of QIBs. The minimum application value of anchor investors should be Anji, so let's see who is giving the right answer for question number 33. Yes, the correct answer will be C. Now, my dear friends, please note all this particular point, because all this point is really very important when you are dealing with the equity market, which is directly mentioned in your syllabus. Anchor investors, we have just discussed, they are having 60% of the QIB quota. If you know, we have just discussed that QIB have 50% of the total issue size. So out of that, 50-60% goes to anchor investors. More importantly, the limit is 10 crore. This is really very important. Anchor investors are also known as cornerstone investors. Please note all this point. This is really very important. Now, if you are dealing into the stock market, you have two different types of deal. The first is bulk deal and the second is block deal. Under bulk deal, there are two conditions. First is 0.5% of the total, 0.5% of the total, I would say total outstanding shares of the company, or 5 lakh shares. So what is bulk deal? Basically, bulk deal is something which comes with a high volume. So for this particular deal, there are two conditions. The first is 0.5% of the total outstanding shares, as well as 5 lakh shares. If you are having, if you are satisfying any situation out of these two, then the stock exchange will give you a separate window. For block deal, the minimum amount has to be 10 crore. This is really very important. This is green shoe option. This is an over allotment case, and this is 15% of the total issue. These are some really very important numbers which I am telling you. Demutalization, there is also concept of dematerialization. Don't get confused between them. Demutalization is separation of ownership. Dematerialization is converting your securities back from electronic to the physical form. It's like you are converting your securities into the electronic form. So I hope you have noted all such points. Now we are coming to question number 34. Demutualization. Right now only we have discussed this particular point. Question number 34. Let's see who gives me the right answer for question number 34. Yes, the answer is C. We have just discussed it right now only. Now let's come to question number 35. Identify the types of bank who operates without any physical branch. A very easy question. Yes, the answer will be neobanks. If you are having conceptual clarity regarding small finance bank, then they require 200 crore to start their business. This is really very important. There are 12 small finance banks in India right now which they are operating. Most importantly, if you also see different news regarding small finance bank, the Unity Small Finance Bank is very much in news. So do cover why Unity Small Finance Bank was formed. This is really very important. For payment banks, the minimum amount to start is 100 crore, and currently there are 6 payment banks which are operating in India. Then you also have to remember that different payment banks was included under the schedule status. If I'm not wrong, Airtel Payment Bank was recently included under the schedule status of RBI. That is under second schedule of RBI Act 1934. So note all this point. This is really very important. Question number 36, my friends. Let's see who gives me the right answer for question number 36. This is a very tricky question for all of you. Maximum of you will do the same mistake which I am expecting you all to do. Next, there was an internal working group which recommended that there will be an increase, but the RBI has not released any press release, nor they have released any notification. So for now, and according to many sources, according to many different newspapers, even according to the RBI annual report, it's 200 crore only. So when RBI accepts those particular, I would say, recommendations by an internal working group, then only mark your answer as 300. But right now for small finance banks, please note, it's 200 crore only. I hope it's very much clear now. So question number 36. To arrest inflation, RBI will have to reduce money supply. This is correct, because if money supplies goes down, then RBI will reduce the liquidity into the system and the purchasing power of people will fall. So you have to understand the chain reaction. Statement C says that to arrest inflation or to reduce it, RBI will reduce repo rate. This is incorrect. Why? Because if repo rate goes down, then money supply will increase. If repo rate goes down, then all the big industries will take big ticket loans from the scheduled commercial banks, and they will increase the money supply into the economy. Statement C says that to arrest inflation or to reduce inflation, RBI will opt for purchase. If RBI purchases, then they will take the securities, but they will induce more money into the economy, which will make this statement incorrect. So that's why the answer of this particular question will be option A. And for your revision, I have just included one screenshot which is directly taken from our notes. So if you want to just mug up, it's okay to mug up because marks really matter. But if you want to understand the logic, just correlate it with the money supply. If money supply goes up, then inflation will also increase, and if money supply goes down, then inflation will also decrease. This is really very important information and you should note it down. Question number 37. Question number 37, my friends. So hardly 3 more questions to go. Although I was expecting much time with you all, I have a good, I would say, question bank type of thing for different concepts. But I can see many less people are there. So tomorrow, if more people come, then we will have more questions. So only statement C is correct. Yes, my dear friends, if you see there, if you know about repo, so repo transaction is a transaction which happens between banks and the RBI. Under repo, banks borrow from RBI. Under reverse repo, banks can lend their extra money to banks. So this is repo rate, this is reverse repo. This is reverse repo. So please mention all these particular concepts. If you are having types of repos, then there is overnight repo. Overnight repo is a contract where the maturity is up to 1 day. Under term repo, the maturity of the contract which will be having a certain type of maturity, it will be specified. And under open repo, there is no maturity itself. It's like an open thing. Anji, so question number 38. Rajat is going with C. Dash is whereby an investor is able to invest lump sum into the amount of a scheme. This is from your mutual fund. Again, a very hot topic. Regularly and transfer a fixed or a variable amount into another scheme. Answer A, SIP. Superb. It's completely incorrect. You have to understand that he is transferring some amount or a variable amount into another scheme. SIP, that is systematic investment plan, mein we invest a certain amount of money into a certain scheme. This is not a transfer. That's why the answer will be systematic transfer plan, that is also known as STP. And what is SWP? You withdraw that particular amount. So this is opposite of SIP. So I hope maximum of you have understood right now. SIP is not the answer. Please understand this. For SIP, you have to invest that particular amount regularly in a particular mutual fund scheme. But under systematic transfer plan, for example, let's say today I am having debt scheme because markets are so volatile. So what I will do, I will transfer certain amount of money from debt scheme to equity scheme when the markets become normal. So this is an example of STP. Please note this particular point. Now question number 39. This is really very important when it comes to the mutual fund chapter. Mutual fund is associated to current affairs as well, and static part as well. And you can also get a descriptive question in your phase 2 paper that you have to explain different types of mutual fund schemes which are operating in India, or they can ask you that what is the structure in which mutual funds are operating in India. So in India there is 3-tier structure. I hope you know about it. Yes, the answer will be additional. But if you want to understand this particular concept, for example, if any mutual fund is coming first time to the stock bourses, then they will issue new fund offer, same like IPO. And we have this particular concept of prospects which we just studied earlier in this lecture. Mutual fund will issue offer document. Offer document will be divided into two parts. The first is statement of additional information. The second is scheme information document. Under scheme information document, you will find all the different related information related to scheme. But under scheme statement of additional information, you will find all the legal and statutory information. And mind you, my dear friend, there is also a document which is known as KIM. This is really very important. KIM, that means Key Information Memorandum. This is a summary of SI and SID. Now let's come to question number 40. Large, mid and small. Okay, but it's not a complete answer, I would say. It's like in equity, hybrid, you have to explain different types of schemes. Ways and means advances. This is the last question for a session. Yes, it's C, 90 days. Can someone let me know the year in which ways and means advances was launched? The year in which means and advances was scheme was launched. Can you let me know the year in which ways and means advances was launched? Year. Your options are 1991, 1992, 93, 97 or none of the above. Yes, 1997. For your information, there are two types of WMAs. Normal and special. Normal is just like you borrow you have to pay within 90 days, but under special you will also require a collateral. This is collateral free. Okay, and for your more information, if you are if government defaults, or if not defaults, if they have a, let's say, payment lag, if they are not paying after you 90 days, then you have that RBI charges 2% penalty over and above repo rate. So for example, if today repo rate is 6, then they will charge you 8% penalty on it, not you, the government of India. Now my dear friends, can you let me know the name of the committee which is associated to means and ways advances? Can you let me know the committee? Means and ways advances, which committee is associated to this particular concept of RBI? Can someone let me know the name of that particular committee? It's Sudhir Srivastav. A very important committee. If you are referring to RBI annual report as well, it's there too much in the news as well. There is also an economic capital framework committee which was headed by Bimal Jalan, Dr. Bimal Jalan. He is an ex-governor of RBI. He is also very important personality because he recommended the change in the RBI annual I would say reporting year. He is also very important when it comes to the contingency fund. He recommended it to be 5.5%. I hope you know different committees. Umesh Sinha committee. Umesh Sinha committee is related to MSME performance. This is also very important. Core investment committees. Core investment committee is associated to Tapan Ray. He was the person who headed this particular committee of RBI. So these are some important committees of RBI and I hope you know all about it. And if you are also seeing, Usha Tharote committee was also there. Usha Tharote committee was there for offshore rupee stability, a very important concept. I hope you know different committees, because it's really very important. And we have a very important committee when it comes to the IT regulations. Jayan Dash something. He was also there. So I hope you know about all this different committees. So I hope the lecture is over for now, but I hope all these 40 questions were really really value addition for you. And please answer all those questions in the comment box. I will be seeing your answers. Manan, please have you can write this particular suggestion on hello@edutap.co.in. So if it is possible, then we will conduct it daily. But right now, seeing the response, your response was really very timid today. Yes, Jayant Kumar Dash was also there. So thank you, people, and meet you in the next lecture tomorrow.